This call is now being recorded. Good morning, friends. Today we are going to talk about income from other source under Income Tax Act 1961. And income from other source is the last source of income. And let's take some numerical problems on this particular chapter, and let's understand the concepts under the income from other source of Income Tax Act 1961. So, what are the incomes which will fall under the category of income from other source? The first one is dividend income. Dividend income from Indian companies, companies which are listed in on Indian stock market or Indian foreign companies. So, if any assessee earns income from dividend, this is a income from other source. Number one. Number two, the rule for income from dividend under income from other source is up to 10 lakh rupees uh, is exempted from tax for assessment year 2019 no, 2021. However, from the assessment year 21-22, full dividend is taxable. There is no limit. From zero income of dividend, it is fully taxable. So dividend income will come under the head income from other source. In the similar way, any winnings from lotteries, crossword puzzles, winnings from races, whether it is a camel race or horse race or any race, winnings from card games or other games of any sort, or from gambling or betting of any form, will come under the purview of income from other source. So winning from lotteries, winnings from solving the crossword puzzles, any winnings from horse races, any winnings from any race, any winnings from card games or other games of any sort of gambling or betting. So those kind of incomes will fall under the income from other source. This is number two. Number three, any sum received by the assessee from his employee by way of contribution to provident fund, superannuation fund, or any other fund, if it is not charged under the head profits and gains from business or profession, will be charged under the head income from other source. So any sum received by assessee from his employers, sorry, by way of contribution to provident fund or superannuation fund. So this is number three. Number four, for example, if Mr. X has invested or deposited money in certain securities or invested in securities, so income by way of interest income on securities, if it is not charged under the head income from that is profits or gains from business uh, or profession, then it will be charged under the head income from other source. So interest on securities, so dividend income, winnings, uh, interest on securities are some of the items of incomes from other source. Income from machinery, plant or furniture belonging to the assessee and let on hire, if such income is not chargeable under the head income from or profits or business incomes or gains from business or profession. So for example, he has a machinery which he has let out on hire. So that kind of income is income from other source. So the fifth, so these are some of the elements of income from other source. Let's take some more examples. So another item which falls under the category of income from other source is any sum of money exceeding 50,000 rupees received without consideration by an individual or HUF for any person, okay, will be under the purview of income from other source. For example, Mr. X and Mr. Y is there, and they are two unrelated people. They are not at all related, and Mr. X has deposited 1 lakh rupees in the bank account of Mr. Y without any consideration. So this is income from other source for of Mr. Y. as the limit of 50,000 has crossed. Okay, so this is the meaning of any sum of money exceeding rupees 50,000 received without consideration by an individual or HUF. But there are some exceptions. For example, Mr. X is there and Mr. Y is there. Okay, and both are brothers. Both are brothers. So if the brother is investing some amount or giving some money to Mr. Y or depositing some money to Mr. Y or into Y's account, then this is not applicable. This clause is not applicable because Mr. X is related to, with Mr. Y. So this 50,000 doesn't come into picture. This 50,000 limit is not applicable. This is not only income from other source because we assume that Mr. X has already paid on the amount deposited in the account of Mr. Y already. He has paid tax, and it is the headache of Mr. X to show whether on this deposited amount he has paid tax or not. So some exceptions are there to this rule. The exception is money received from a relative, whether, for example, Mr. X and Mrs. X are there. So Mr. X has deposited in Mrs. X account some 50 lakh rupees as they are house and husband and wife. This is not applicable. Brother, if the brother is depositing or sisters are depositing or parents, so any money received from spouse or brother or sister or parents or in-laws or brothers and sisters of parents or lineal ancestor and descendant of the individual or spouse of the above mentioned persons. So this is number one. If money is received on the occasion of marriage, so Mr. X is marrying Mrs. Y on this occasion of marriage. These couples have got some um, money received on the occasion of marriage. So this is not income from other source. Number two. Number three, money received under will or inheritance. For example, Mr. X is father of Mr. Y, and Mr. Y has inherited some 50 lakhs property or money of 50 lakhs money. So this is received under will or inheritance. So this is not income from other source. And money received from local authority. So local authority is giving some money to a person or SSC. So this is not any money received from a local authority is not a income from other source. Is not at all an income. It is exempted income. These are all exempted incomes. Money received from a fund or foundation or a university or educational institution or a hospital or medical institution or any trust referred to in section 23C. So 23C comes under uh, the topic incomes which are exempted under section 10. So we have a separate chapter under section 10 which largely speaks about incomes which are exempted from tax. There is a separate video which is uploaded on YouTube on the topic incomes which are exempted under tax from tax under section incomes which are exempted from tax under section 10 of income tax 1961. So there is a video which is uploaded on YouTube. You can refer to this video and get an information about section 10 to all the items which will come under section 10 and including section 10 subsection 23C. So what is section 10 subsection 23C? It speaks about money received from any fund, foundation or university or educational institution or hospital or medical institution or any trust or institution which are referred in section 1023C which is exempted from tax. So money received from a charitable institution under registered under 20 which is registered under 12 AA is also exempted from tax. It's not an income from other source. So let's talk about some more incomes which are under the purview of the list of income from other source. So this one is income from subletting. Income from subletting. Income from subletting means Mr. A is there and B has hired B has hired from A his house property on rent of some 50,000 rupees. So B has hired a house property for his residential purpose on a rent of 50,000 rupees. Now, this half of the house property has been sublet by B to Mr. C for 60,000 rupees, for example. Now, if you do proper calculations, the rent to A from B will be 25,000 rupees for this particular part, which is exactly half. So this is let out to Mr. C for 60,000 rupees for the whole year. So 60,000 is the income, but he has paid 25,000 for the same house property to rent of 25,000 to Mr. A. So after you deduct from this income from house property which has been let out some 25,000 rupees, this is the income from sublet out. So subletting of house property or machinery or plant is also income from other source. Interest on bank deposits also is income from other source. Income from royalty, agriculture income, which is from a place situated outside India. For example, Mr. A is there and he has agriculture in India, and any income from agriculture land is exempted from tax if the agriculture land is in India. However, if the agriculture land is situated outside India, like for example Nepal, Bangladesh, Burma, Pakistan, and is deriving some income from such a agriculture land, then it is fully taxable under the head income from other source. In the same way, rent of a plot of land. So there is a plot of land which has been rented out, and it is this rent, for example, is 2 lakh rupees. So this is income from other source. Salary payable to MPs and MLAs also, in the hands of MPs and MLAs, it is income from other source. Now, so we have already spoken some incomes. Let's talk some deductions under section 57 of income from other source. Under section 57 of income tax 1961. In case of dividend or interest, any reasonable sum by way of commission or remuneration to the banker or any other person for the purpose of realizing such amount. For example, Mr. A is there and he has invested some 5 lakh rupees in a company's equity share capital. Means he has purchased some shares of XYZ company by investing 5 lakh rupees. And this 5 lakh rupees is borrowed from bank at an interest of rupees 12%. So every year he has to pay 60,000 rupees as interest. Okay, so this is the expenditure. However, this 5 lakh rupees which he has invested in equity share capital, the company in the share capital of a particular company, for example, Infosys, and Infosys made beautiful profits and declared a dividend of some X rupees, and because of this, he has received some 2 lakh rupees, 2 lakh 40,000 rupees as dividend income. So this is income from other source. As I already told, dividend income is fully taxable from assessment year 2020, 21, 22. So this is fully taxable. But however, to earn an income of 2 lakh rupees as a dividend, he has already paid to the banker an interest on the loan taken for of that amount which has been invested in equity share capital of Infosys, 60,000 rupees. So under section 57, it says that any expenditure incurred to earn income is deducted. So in this case, the net income from dividend is only 1,80,000 rupees. So similar kind of expenses incurred by the SSC to earn income from other source are to be deducted, and then from after deduction you have to find out the net income from other source of a particular income from other source. Hope you have understood this point. Number two, in the similar way, in case of letting of machinery, plant, furniture also, if the SSC has incurred some expenditures like rent, rates, taxes, repairs, insurance, and depreciation, he can claim that deduction. For example, a machinery was there. Mr. A had a machinery uh, and he has rented out this or let out this house, this machinery to Mr. B for rupees 5 lakhs as annual rent. Now, on this machinery, he is paying rent, taxes, or some repairs are incurred. He's having some repairs expenditure, and he's done some insurance on this machinery, and there is an element of depreciation. So all these expenses are incurred by the assessee, Mr. A. And assuming that the total expenditure for rent, rates, taxes, repairs, insurance is some 2 lakh rupees. So after expending 2 lakh rupees towards these expenses items, he has incurred an income, he has earned an income of 5 lakh rupees. So under section 30 and 31 of Income Tax Act, these 2 lakh rupees can be deducted from income from other source, and income from other source, that is income from letting of machinery, plant and furniture, net amount is 3 lakh rupees. So this kind of deductions or expenses are allowed to finalize the net income from other source of a particular income from other source. So this is also clear. Next one is family pension. Deduction of 33 1 by 3% of such income, or rupees 5 15,000, whichever is less. Now what do you mean by family pension? For example, Mr. A was working in government employment and he retired, and he was entitled for monthly pension of 15,000 rupees. So he was drawing 15,000 rupees monthly pension up to 2018 or 19, and in the year 2019 he died, and eventually this 15,000 pension is earned by her wife, sorry, his wife, Mrs. A. So this is called as family pension. So Mrs. A is now drawing 15,000 rupees per month pension, and the total income is 1,80,000 rupees as far as family pension is concerned. So this is the income of Mrs. B from family pension. So this is income from other source in the hands of Mrs. X. Now there is a certain deduction, and this deduction is, this is one third, we can call it one third of such income, or 15,000 rupees, whichever is less. So one third of this income is 60,000 rupees. So 60,000 is one such income, other is 15,000 rupees, whichever is less is exempted from tax. So 15,000 in this case is the lower, is the one which gets to the this is the exemption amount from this total amount. So out of 1,18,000 rupees, the lower is 15,000 rupees of the family pension, and the remaining 1,65,000 is taxable. So hope you understood this income from other source. So personal amounts which are not deductible under section 58. So personal expenses will not be allowed to be deductible. Any interest paid outside India on which tax is not deducted at source also is not allowed to be shown as an expenditure. For example, I told you dividend income. Dividend income. So in this case, for example, he has borrowed from a foreign bank some 5 lakh rupees in loan, and this is invested in dividend, in sorry, equity shares of a particular company, for example Infosys, and the Infosys has declared 2 lakh rupees as an dividend income on this 5 lakh rupees of investment. On this 5 lakh rupees he is paying to the foreign bank, which is in other part of the world, interest of some 1 lakh rupees. So you should ensure that on this 1 lakh rupees you should have deducted tax at source. If it is not deducted tax at source, then this 1 lakh rupees will not be allowed to be shown as deduction under section 58 from this amount of dividend. Hope you have understood this point. So there are similar kind of examples in this particular slide. Any salary paid outside India on which tax is not deducted at source will not be allowed as a deduction. So this will not be allowed as a deduction under section 58. In the same way, uh, there is a separate chapter on tax deducted at source. Uh, a video of this is already uploaded on my YouTube, so you can view this video which explains and it gives a comprehensive explanation to the topic tax deducted at source. So let's take a small problem. Let's take a small problem and solve the problem. The problem is Mr. Suresh Mehta is the owner of so and so company and he provides the following information. Income from business is 67,500. So this is income from other source in 67,500. 13,500 was recovered from earlier from cashier, which was allowed as a business expenditure, being embezzlement of cash in earlier previous year. This was not accounted in the books of. So this is income from business. So this has nothing to do from income from other source. So this is also income from business. It has nothing to do with income from other source. So if it is a business income, then this is business income. This is also business income. So 67,500 plus 13,500 is income from uh, business. So we have already uploaded a video or video set of videos on income from business or on the topic profits and gains from business or profession on the YouTube. You can view all these videos on my channel S Ramesh Kumar Mehta. Next one, Mr. S Suresh Kumar Mehta took a bhavan on rent, that is house on rent on 1,000 rupees, and he sublets this property to so and so on 1,500 rupees. So one side is having an income of 1,500 rupees and the other side is having a expenditure on earning this kind of income, which is income from other source, to the tune of 1,000 rupees. So eventually the income from subletting, which is income from other sources, 500 into 12 is equal to 6,000 rupees. So this is one part. Interest accrued on fixed deposits is 8,500. This is also income from other source. So 6,000 is one income from other source. 8,500 is income from other source. Interest on fixed deposits with Toyota Private Limited, gross TDS is 7,500. So this is before deducting 7,500. So income from interest is 7,500. Director's fees. This is also income from other source. So 3,000 is another source of income. Interest on debentures amount rupees 6,000. He paid 3,000 to the bank on this 6,000 on earning interest on debentures. So this is deducted from 6,000 rupees, and income on interest from debentures is income from other source. This is income from other source. Last one is winnings from lottery 70,000 rupees. TDS is 30,000 rupees. Cost of lottery is 1,000 rupees. So the total winnings from lotteries is 1 lakh rupees. So after deduction, it is 70,000 rupees, but winning from lotteries is 1 lakh rupees. So from this 1 lakh rupees, 1,000 can be deducted. So 99,000 is income from winnings, that is income from other source. And this 30,000 rupees can be is the one which is already the tax which is already deducted at source from income from salary. So when we find out the tax payable, at that time we can deduct this 30,000 rupees. So this is the numerical problem on income from other source. So thank you so much for uh, patiently listening to the topic income from other source. Thank you so much, and bye bye. Take care.